They couldn't do any. They couldn't do any building. They couldn't do any billing. They couldn't do any scheduling. They couldn't render any services. We ended up paying the ransom. We were able to negotiate the ransom down for our policyholder from over $1 million to $650,000, which was great. But if you take that claim today, that claim happened in 2019. You take that claim today, the demand would be now over 5 million, because the original demand was in Bitcoin, and the Bitcoin prices have gone up dramatically. So the big issue with cyber right now is information security. Not all organizations and businesses have the adequate information security that they need in order for insurance companies to feel comfortable providing the coverage. And as such, they're increasing the cost of cyber insurance 20, 30, 40%. It's pretty significant. What else can I share with you, or questions you might have that I can ask, help answer for you?
Well, I think, Chris, that's a really good transition right now to mention on cyber insurance. And, we all hear about these giant cyber-related incidents, whether it's ransom, where, the entire city of Atlanta a few years ago, or the city of Baltimore, were shut down for days or even a week at a time, because they couldn't access their computer system. So we hear about all those, but we don't always hear about, how these people target smaller businesses, and those being the business right here in central New York and in our community. And so I think, this is a good opportunity to have Lisa talk a little bit about, they've had some experience. An organization of her size has had the need to utilize their insurance from time to time. And so Lisa was going to talk to us a little bit about that.
Thanks, Jeremy. And we worked with Chris, and we worked with a law firm out of Chicago, no, Pennsylvania, I'm sorry. And then we had a forensics company come in from Chicago to help us do an investigation once we realized we had a breach. It was we had a ransomware attack about 10 years ago when I first started at the agency. We do backup on our files every single night, so we were able to recreate everything that we needed to recreate very quickly. Didn't have to pay any ransom. We had Synergy Global Solutions at the time doing our computer work, and we didn't really have cyber insurance then. It's interesting, Bob Gardner, who was my predecessor, only had 5 email accounts for the entire agency because he was so worried about cybersecurity. But we can't function like that in today's environment, especially when we're doing everything from a distance. So this was a very sneaky attack, and it was a very interesting attack. And fortunately, we were able to sort of limit the scope of the attack fairly quickly in the middle part of December. And we think we got this from one of our behavioral health care collaborative partners. One of our employees opened an email that looked like a file, and it opened up an HTML address on the web and gave this individual access, and one individual person access to her entire email portfolio. So everything that was in her inbox, everything that was in her outbox. And what this individual did was create a rule on our Outlook email that said any email that comes from Lisa Herschel, Trisha Reynolds, who is our finance director, NBT Bank, NBT Financial, or Tompkins Trust should immediately be deleted from our inbox and moved to our deleted folder. And then the perpetrator began to use the deleted folder in our Outlook as his personal email, emailing our bankers and telling them to add him or someone who represented him to our bank accounts. And became very insistent. In real time, this was occurring. So it was a very frightening situation when we realized what was happening, obviously. The first thing we did was make sure that we completed what we had already started, which was multi-factor authentication on all of our email accounts, which means every week or every other day, depending on the individual that we choose their timing, they need to get a text message and an email message when they log on to their email. and their Outlook account. That was the first thing that we did. We limited the damage as a result. It was limited to 2 people, actually, myself and our BHCC coordinator. Fortunately, they were not able to get a hold of our bank accounts, although they did try and send an email to our investment advisor, and he did receive an email from me asking us to put this individual on our accounts, which he can't do. And then luckily, Brad Totman called me almost immediately from Tompkins Trust and said, Lisa, I'm trying to follow through on your request, but I have no access to your bank accounts. And I'm like, what are you talking about? So we decided to go ahead and make a claim. We have had a number of BHCC partners in our network with viruses. No one ever connected with us. I don't think there was any intensive investigation into those particular incidents. I think that's where they entered our system. I felt like, not investigating and having a forensics company do work around what could have been breached is sort of like having sex with no condom. You don't know what you're spreading to whom. And I wanted to make sure that all of our partners were protected. So we did file a claim. Chris was great at the Philadelphia. He hooked us up with an attorney, because in conversations of this nature, you want to be in a situation where you have client attorney privilege in case there is a breach, and you can make determinations as to how impactful that breach might be. We do have a lot of HIPAA protected information in our email accounts. The forensics company did a deep dive in most of our, in all of our systems. Again, because we're fairly well protected with antiviral software, the damage was very, very limited. But we're still working with the forensics company. They haven't completed their investigation yet. I feel as though we had great service from the Philadelphia. I don't think it was as expensive as I thought it would have been. The insurance company has been great. And what happens is Philadelphia hooks up with the attorney works directly with the forensics company, again, allowing for attorney-client privilege. The structure was very, very well outlined for me and for our computer person. And I have to tell you, it took so much worry out of our situation, having that cyber liability, knowing that we had that coverage, and knowing we could do that deep dive and have that double protection with the Philadelphia and the attorney, working with the forensics company, making sure that we were able to do that deep dive and protect our anyone who might have access to our email accounts. So I'm really glad we had it. I think it was worth every penny, and continues to be so.
I think the only thing I would add, I think what's really important was time was of the essence, and the fastest, as quickly as you can get everyone involved and take the action that you folks did, probably helped mitigate and reduce the possible loss that could have occurred that could have been greater.
And Chris, I think it's important because we were fairly well protected with antiviral anyway, but we were apprised quickly, we were able to act quickly, and we were able to mitigate the damage. And I think that any of you who has been looking at cyber insurance, I also highly recommend that you implement multi-factor authentication on all your email accounts, so that an individual has to get at least one text and or email, and in fact, even better, one text and one email in order to authenticate, sign on to an email account. It's shocking how many times a day we get hit with viruses. They look like voicemails because we have voice over internet protocol. They look like emails from the US Postal Service. That's how we got our first crypto lock. They look like they're very, they look very authentic. They look like they're from our IT department. We're getting hit 3, 4, 5 times a day. So having only had one breach in 10 years, knock on wood, I feel very lucky, but I also feel very well protected, knowing that should anything happen and a breach occur that shares HIPAA protected information or credit card information, we have a connection that's going to help us do that deep dive in forensics and keep our information safe.
Thanks, Lisa. And you know, were there other post-claim concerns or issues that you guys had to go through? A lot of times, if there is HIPAA-related, personally identifiable information, some of you, I know I've received it in the mail at home, where I've gotten a notification, whether it be from a credit card company or you know, something along those lines, where they had to disclose to me that my information may have been released. Oh, looks like Lisa had to step off for a minute, but you know, there's.
No, I'm Jeremy, sorry.
Oh, okay. Nope. No, I was just curious if there was post-claim activity or what or you know, what anything you put in place. You mentioned the multi-factor authentication. You know, was there anything after the claim that you guys were able to implement to help reduce the likelihood?
You know, I think we're doing regular deeper dives and we're adding more firewall security, but you know, we were fairly, you know, again, Jeremy, I think that's why we limited the damage. We were fairly well protected in the first place because of the HIPAA related information that most of us have. Luckily, they were after the money. So they went directly to the people who don't have any HIPAA related information in their email accounts. So they wanted the cash, man. And I was glad and grateful to Brad Topman at Tompkins Trust, who called me and said, you know, I can't do this, right? And it was news to me. So I would remind folks, you know, to be in regular contact with your bankers. Again, they were after the money. Always look at your email account and just check and see if there were any rules placed on your Outlook or your email account that you may not be aware of. There's a tab in the file section of your Outlook, just to see if anybody may have snuck in there and added a rule to your email that you weren't familiar with. You know, again, who looks at their deleted folders? And it was over the holidays, so they really thought that they were gonna, you know, grab us fairly easily. But you know, I would make sure
At least,
that,
you know, I'm sorry. I'm sorry,
you know, that's okay. You know, I would absolutely make sure you work with a computer company as well, who's very well versed in setting up opportunities for multi-factor authentication and firewalls and antiviral, because it was the antiviral that stopped the spread.
I would agree with Lisa that in most instances, they're looking for a quick payday. So they're looking for where they can get the money the quickest versus, you know, getting into, you know, personnel or customer records with people's personal identifiable information. That's a longer play to use that information than just getting cash. So that's what you're typically going to see right now from that standpoint.
They certainly are getting more and more creative. Hope Cross is on the call here. She does a lot of our IT and software and things, and she's the first one to tell us if it looks suspicious, don't open it. But it's getting harder and harder to say if it's suspicious or not.
If you even get an email that you weren't expecting, I hover over every address to see where that email address goes from, to make sure that it's someone that is reputable, that may come from my agency or from outside the agency that I'm familiar with. So just hovering my mouse over that email address shows me exactly where it's coming from. So if it says it's coming from M&T Bank and I hover over it and it says it's coming from someplace at Ukraine you know, edu, I know that that's not a reputable email.
Right. And you know, they are getting more creative, and particularly with more and more people working from home, you know, there's just been a lot more of an exposure with people working remotely. You know, they're on their computer more, people are doing more online purchasing. So whether it's for your not-for-profit agency or even for yourself, you know, you might want to take a look at your homeowner's policy and see what type of coverage you may have for identity theft and things like that, because people are getting more and more creative.
Any email that directs you to an HTML address, if it says, take a look at this file or open this invoice, and it takes you an HTML address on the web, that's a danger sign.
Yep. And I also think we probably all have the situation where our employees are doing double duty for others that maybe are out for one reason or another. And so they're always in a hurry. They're always wanting to make sure they get it. You know, somebody wants something, I got to do it, I got to do it. Well, slow down. It's not worth it. If you have stuff on your desk that you need to get done, do that, jump on that. But responding to an email or, curiosity about a document that somebody that you don't know has sent you is not a high priority. I will defend that day in, day out. If somebody says, hey, they didn't get back to me, well, let me just check this email out. If it looks like, if it looks suspicious, or we don't have your email address on file, and besides it looks suspicious, I have people that say, hey, I really need, no, you don't. Call them, find out, pick up the phone. It's so easy to just click and do, but be cautious. And people are, they're hearing it a lot. I think they're hearing it. We always say we have to hear everything like 7 to 15 times, depending on who you are. But the more and more we talk about it, the more and more people do what they, that's their instinct, is to stop instead of click. So.
Thanks, Hope, and thanks, Lisa. Those are good tips to try and help reduce those cyber exposures. And then, I talked a little bit earlier about getting on our mailing list and our listserv about some of our loss control. The better educated you are, or even you may know some of the stuff that we're sending out, but just to hear it again or see it again can help potentially reduce some claims. Another thing that I'll give Philadelphia a plug here is some companies, and Philadelphia being one of them, will work with you now. And we've some of you, I think, on this call have actually implemented their water sensors in your buildings. And Philadelphia provides a water monitoring device, and it's not going to shut off the valve or anything, but you will get a notification sent directly to your cell phone if that monitoring device is, if it gets too cold, right on the water pipes, they'll get a notification saying it's gotten below freezing, and you could have potential damage there. If it gets too hot, it'll send a text message to whoever you have it set up to send to. And so there's things like that are, in Philadelphia's case, it's free of charge, that you can take advantage of to try and reduce some of those claims, or at least reduce the costs when you do have a claim. Were there other questions, whether they be cyber related or just general P&C, property casualty insurance related questions that Chris might be able to answer for folks?
I have a question for Chris. I'm curious, what do you look at when you're determining the coverage limit? Like especially for cybersecurity. I'm also wondering if there is a ransom attack, you have to pay a company to restore the data. So is something like that covered as well?
I'll answer the last part of the question first. So yes, the policies, whether it be from Philadelphia or other companies, should provide, or usually do provide, an insuring agreement that will cover your digital assets and the loss of income due to your digital assets being damaged, lost from a cyber attack or event. So that, well, my recommendation is that when you purchase a cyber policy, that you get that coverage too. The example that I gave earlier the business was a contractor, and they did purchase, that coverage from us. So the ransomware was covered in terms of paying the ransom, but then they found that there was some damage to their records and files. They had to buy new source code for some of their software applications, which were covered by that portion. And because they lost income for not being able to bill or schedule jobs, that was covered by that policy too. So the answer is yes. Most of the cyber policies out there in the marketplace that Bailey Place can place for you has that coverage feature you can have. As for limit, that's a tougher question to answer because it's more difficult to buy higher limits today than it was 5 years ago. 5 years ago, insurance companies were giving, $5 million, $10 million limits. Today, they're only offering initially $1 or $2 million limits, and then an agency like Bailey Place has to then secure excess over that. So my recommendation is to get as high of a limit as you can purchase, because these types of claims are severe, and it's hard to know what it's going to be. Whereas in certain types of losses like bodily injury and property damage on general liability is more quantifiable, because if you know where the accident occurred, let's say it's in Cortland County, and you know the age of the person that got injured, and you know what type of injury it is, it's easier to quantify how much it's going to take for that person to recover from the injury, what their loss of income is going to be. Cyber's a lot harder to get that actuarial data. So I would recommend trying to get a higher limit if you can, for $1 million, $2 million, up to $5 million if possible. The one thing that will impact that decision too is if you're contractually required to have a higher limit by a funding source or a contract that you're involved with, that they might say, hey, we need you folks to carry a $2 million, $3 million, $4 million limit. So you have to look at that aspect as well. Did that answer your questions?
Yep, completely makes sense.
Okay.
Thank you.
You're welcome.
I haven't gotten any other questions texted in here in the chat. Was there any other questions for Chris or for Lisa? If not, I would like to thank both of them very much for joining us today, and for all of you for joining us today. Kind of to wrap things up, we started out talking about what you guys can expect in the year or 2 to 3 years to come as far as your insurance premiums go. Not-for-profits are known to be on a very strict budget based on your funding. And as Chris said, there's a number of factors that are driving this hard market right now. And so, you may be oftentimes looking at, whether it's with Philadelphia or any other national insurance carrier, you may be looking at, between a 5 and a 15% annual increase for the next couple of years while this hard market is in place due to the factors that he mentioned earlier. Traditionally in a soft market, there are companies that are competing for your business, and you may be able to save money from time to time, or you'd be looking at an annual 2 to 3% premium increase. That's just not the case that we're seeing in this hard market. Insurance companies are, clarifying their coverage forms. They may be adding some exclusions, particularly to communicable disease, that might not have been there before, and the premiums are going up. So, as you prepare your budgets and you prepare your board of directors, you want to keep that in mind, that over the course of the next year to 2, we are in that hard market, and then we do expect, it is cyclical in nature. So we do expect to see that soft market come back around again as we come out of the pandemic. But insurance companies are, they're facing some of their worst years that they've had. And then when you add in the cyber exposures, that there's not a lot of historical data to base that on. And Chris mentioned that a little bit too, was that it's hard to decide how much those cyber insurance policies are going to cost because they haven't had a lot of historical data to base it on as far as the claims that they're paying out. And that's, you know, the actuaries that are sitting there with their calculators and their number crunchers and their pocket protectors that are sitting there at their desks. You know, they're the ones that put together that actuarial data that for insurance companies to determine how much something may cost in the future. And they just don't have that data to work from yet. So I did hit record here, and a little bit, I missed the introductions when I hit record, so I apologize for that. For those of you that that were here today, I will send out a link to this recording. So if you do want to share any of the information or go back and take a look at some of the stuff we talked about today so that you can pass that along, you'll have access to that. You've all got my email address and information. And so if you have any questions or follow-ups, or like I said, if you'd like to be added to our email distribution list for some of that loss control information to share with your board or to share with your staff and employees, give me a call or shoot me an email. I'll make sure it's from you before I open it, and we'll go from there. So once again, I really appreciate everybody's time. It's been almost exactly 45 minutes, which we tried to wrap it up in. So thanks again, everybody, for coming.
Thank you.
Thank you.
Thanks, Jeremy.